Morning, ladies and gentlemen. Welcome to the show. Glad to have you guys here on the last day of April 2024, April 30th. It's a Tuesday. Thank you for tuning in. We're going to get started right here and take a look. What's the Fed up to? Fed rate hike decision. What are they up to right now? It says dollar showed mild weakness Monday, influenced by Japanese holiday, while major currencies like the yen, euro and sterling remained at recent lows following last Friday's significant fluctuations. An upcoming Federal Reserve decision. Attention's now turning toward the Federal Reserve's upcoming policy review on May 1st. So they're going to be watching that carefully. With a series of strong U.S. inflation reports and comments from the Fed, Jerome Powell, the market anticipates the central bank will postpone any interest rate cuts. The expectations have shifted, with most investors predicting a potential rate cut not before November. So, things have changed, because they were expecting a number of cuts this year. And I guess those cuts are not going to materialize. They're headed toward disaster right now. Something's going to break, especially in the bond market. And we're going to take a look at that a little bit later in the show. Breaking, U.S. and other G7 countries are going to phase out coal by early 2030s, they say. Well, you know, their efforts to phase out coal quite recently have ended up with them having to, in the emerging economies, countries in the emerging economies, China and other countries are deeply into coal, the use of coal. And it seems like the more they try to stop using coal, they stand about as much chance of stopping using coal as, it's kind of like a really, really overweight, morbidly obese person saying they're going to quit ice cream. Them saying that they're going to quit coal or phase out coal by early 20. Well, I'm going to wait and see. I'm very skeptical in my position of that. Okay. I talked a few days ago about the ATACMS missiles that were given to Ukraine and they've been pounding the Russian airfields in Crimea with them. That's what they've been doing. They've already used a number of them. There's one in flight. It looks like it's taken off. That's what they look like. It says a wave of Ukrainian long-range weapons, widely reported to be around a dozen U.S.-made ATACMS ballistic missiles, pounded air bases and air defense installations across the Crimean Peninsula. So they're striking Crimea with them, is what they're doing with them. Now, I talked about my show about the potential that these same weapons could be aimed at Russia itself. But evidently they're not doing that. They're using them right now to attack Crimea. Now, we all know that that a few years ago, Russia annexed Crimea. So they're attacking the Crimean Peninsula with them. Now, what they're doing is, right now, is they don't want the change in administrations. If there is a change in administrations in the United States, they want to proof this war for at least 10 years. It says soon on the heels of President Biden last week signing into law a $61 billion aid package for Ukraine's defense, President Volodymyr Zelensky on Sunday indicated that he is working with Washington on a bilateral security agreement which would last 10 years. This would lock America into their commitment to the war in Ukraine for 10 years. He says, "We are already working on a specific text," Zelensky said. Our goal is to make this agreement the strongest of all. And then it shows a picture of him hugging Biden. It says, we are discussing the specific foundations of our security and cooperation. We are also working on fixing specific levels of support for this year and for the next 10 years. He says it indicated it will likely include agreements for long-term support centering on military hardware and joint arms production, as well as continuing reconstruction aid. This agreement should be truly exemplary and reflect the strength of America's leadership, Zelensky added. So they're planning on keeping this war going for 10 more years. Where are they going to get enough Ukrainians? Well, I was watching the thing this morning on the news, and they're scouring the world. Ukrainian men around the world are having trouble with their passports and stuff, visas and stuff like that. And they're going into visa offices and passport offices and stuff, and Ukraine's put an order out that nobody's exempt from this military duty. There's going to be no exemptions. But the thing is 10 more years, and the United States is going to continue to send money for 10 more years. That's a long time, and they're trying to ensure this, and this will keep the military-industrial complex making these machines of war for Ukraine for 10 more years. Well, I guess what they want to do is future-proof it against Trump. It says here, amid fears European capitals that Donald Trump, if he recaptures the White House, would seek to scale back aid. Now, silver and gold today are taking a beating. Silver's down 81 cents at the time of this writing of this article at $26.27. And gold today is down $42, which is a lot. $22.93 today for gold. The cryptocurrencies are taking a beating today too. So all of the non-dollar denominated assets today are taking a bit of a beating. This is a buying opportunity for anybody who's not into non-dollar denominated asset classes. It's a very narrow band of classes out there of things that are non-dollar denominated, and they don't have counterparty risk. If you're invested in anything that's connected to the dollar, stocks, bonds, mutual funds, CDs, and collateralized loan. I mean, it's just, the list goes on and on and on and on. CLOs. I mean, just all of these dollar derivative products that are based on the dollar. They base their value on the dollar. There's tons of them out there. But when we're talking about non-dollar denominated asset classes, man, it's such a narrow little channel. It's such a tiny amount of things. It's just basically cryptos, gold and silver. That's the root of it. There's a few other things, like you could go out and invest in copper or real physical copper and put a bunch away for yourself, or something like that, or maybe some other precious metals like palladium, or but the real narrow band of this root out of the dollar. And what's the biggest important thing about all this is when I mentioned no counterparty risk. All of your dollar-denominated assets that you have in your portfolio, all these things are connected to the dollar. They all have counterparty risk. There's always a third man involved that is doing the transaction for you. You're buying stocks, there's a third party involved. And generally these are connected to the banks. And it's only as good as the structure of the banking system. Need I say more? That's your counterparty risk. And even if you have gold or silver, real physical, and you have it stored at a vaulting company, all those vaulting companies are connected to the banks. Now, Say they got the vault over there and it's got a lot of gold in it. It's got your gold in it and a whole bunch of other people's gold in the vault. If the banks go down, they're going to secure assets. It doesn't mean they've stolen your assets, but it means that they come in with a Brinks truck and load it up and go with it. They take it and go with it. Now, in order for you to get your assets back, you have to go through the proper channels. You have to jump through a whole bunch of hoops. You know what I mean? It's the same way if your bank goes bankrupt. You might have to jump through some hoops to get the FDIC and go through paperwork and stuff to get the FDIC that insures your account. It's all part of the third-party risk. And if we get a system-wide meltdown, oh my gosh, guys, that the FDIC can't handle and stuff like that, then all of these banks and stuff are going to be grabbing at assets, grabbing anything that they can grab if they're all going down. It's just like a bunch of rats swimming in the water, and if they see a ship swimming by, they're all going to try to get on board. And they're all going to try to grab for whatever they can grab for the gold. And it comes down to it. We're living in a world where if you don't hold it, you don't own it. It's always been possession is a very strong part of the law, is possession. You know, and this is the way our world works. So you got to think about third-party risk involved in a lot of these asset classes, and just how much is that paper portfolio you have, which is all a big bunch of papers, or now they probably all got it digital. You know, digital on a computer. Sure, you can open up your account and you can see how much money you got and everything else, and you can see you're gaining money every day and blah, blah, blah. But if the system breaks, how much is that bunch of papers worth? No more than all the other paper. It's a paper. This is a paper world now. It's like it's a clown world. It's a clown system. And so you got to think about third-party risk, guys. It's very important. And these are the only asset classes. Like if you have Bitcoin and you have it on a paper wallet, or you have it on a hardware wallet that's very, very hard to crack, the codes and stuff, you know, and you got the keys, what's called the keys to that wallet, then there's no third-party risk. If you got it on an exchange, your Bitcoin, then you have third-party risk, just like when you have your money in the bank. But if you've got it not on an exchange and you've got the private keys in your possession, then you don't have any third-party risk with Bitcoin or the other cryptos. And gold and silver, if you have it in your possession in its physical form, then there's no third-party risk. These are the only things out there that don't have third-party risk, because all of your U.S. Treasury notes, your dollar bills, your bills that you have in your wallet right now, even though they exist in the real world, the third party is the Federal Reserve. And those notes only have value as long as the Federal Reserve say they have value. They could recall them all in if they wanted to. They could just say, okay, we're not accepting them for trade any longer. We're recalling them all in for some new type of CBDC or whatever. And suddenly, third-party risk hits you right in the face. So think about these things. Now, cryptocurrency today. Bitcoin, 60,000. She is dropping, and she's just hanging on above 60,000. 60,936. Seriously, guys, this is a bad day for these asset classes. It should be the most valuable asset classes because they don't have third-party risk. But it's a bad day for them today. We're having a bit of a bad day, but you know, I mean, we've had quite a few good days here lately in these asset classes. So we can't complain too much. Nothing goes up in a straight line. Taking a look at the Dow today, she's down 277 points. We are nearing the point right now where something really bad within the financial system could I'm not going to really call it the black swan, because you can see it coming. Something could break unexpectedly. because of just so much tightness that's been happening lately. And they've been getting away with it for the longest time. It could just break suddenly, something unexpected within the financial system. So 38,101 for the Dow, and it's down 284 points on the day. Taking a look at crude oil, 81.43, it's down $1.20. Bonds and rates. What's up with this mouse? Okay, the long end is doing exactly what I said it would do yesterday. I said today it would probably go up 5 basis points. One day it drops 3 and the next day it goes up 5. And so we're at 4.66 on the US 10-year and we're up 5.1 basis points. Now, tomorrow it might drop 2. And then the next day it'd go back up 6. But it's been slowly meandering its way up. It's kind of like a saw blade, up and down. But each day it goes up a little bit higher. And so they're creeping up, these bond yields. So 10 years at 4.66, US 30 years at 4.77, and it's up 3.5 basis points on the day. Remember what I told you about 5% on that US 10 year, and we're at 4.66 and climbing. And so we're keeping our eye on this, but I'm expecting something really will break at 5% or higher. The system, this is where you're going to see the breaks in the system happen, is here in the bond market. This is what you have to watch, especially that US 10 year, because all debt out there, outstanding debt, mostly is priced off of that 10 year. That's why the Feds work so hard to keep it suppressed, the 10 year. What you notice here, what you'll always notice is it's the lowest yield. You move out to the 1 month, 5.37. All of them are higher yield, except for that 10 year. That 10 year is 4.66. It's the lowest yield of all of the bonds out there. And they've been keeping it that way. Because they know most all debt's priced off of that 10 year, and that's the sensitive one, and they have to try to keep that yield down on the 10 year. But it's creeping up. And if it surpasses 5%, I mean, that's the price of this fiat trash. It's a crazy game that they've started, where they've taken just a bunch of paper. Basically, this is just like the Chinese invented gunpowder. The Chinese invented this paper money, and honest to God, I mean, it's unbelievable that they could transfer value into something that's almost totally valueless. It's not even paper anymore, it's polymer. It used to be, when you had a hyperinflation and all your paper currencies out there became worthless, you could use them to light a fire with, or you could use them to go to the bathroom with, you could crinkle them up and make them soft and use them for other things. Paper. But you can't use this stupid polymer for anything. You can't even burn it. It just melts into a plastic that would ruin your lungs if you breathed it in. It stinks, if you smoke, if you burn it. It's, it's plastic. Plastic money. It's not even worth paper. It's the world we live in. 106.08 on the US dollar index, and she's going up today. And this is just pounding all of these euro dollars and everything out there, and all these loans out there, and tremendous loans to merging economies and everything else, and they have to try to pay that money back with the dollar going higher and higher. It's hard, and it makes it so that the dollar milkshake, Brent Johnson and his dollar milkshake theory, actually comes to fruition when the dollar gets really strong like this. But dollar strength can lead to sudden dollar weakness. Listen, guys, thank you for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Have a great afternoon. Bye-bye.